Now let's join Anders Boyer-Søgaard, the CFO of Pandora. And we've been talking about your numbers, Anders. Thanks so much for joining us. You know, they're not great, but I also want to ask you, how long can this company go without a CEO? What's your plan moving forward here?
I think it's pretty clear from the announcement that we're coming up with today that we are not in a waiting mode. We are executing forcefully. It's clear that the numbers that we have announced this morning are not satisfactory, and that's why we are launching a program now in order to address the challenges that we are facing.
Anders, good morning. It's Manus. Do you think the business is now vulnerable to a bid? Have you had any approaches?
Obviously, we are aware of the rumors in the market, but we don't comment on that. But if or when a bid comes through, we will take a look at it, obviously, and then just follow rules and regulations as they are.
You've seen quite a slowdown in sales from Chinese consumers, which is obviously a key part of your business. What are you focusing on in terms of trying to boost revenue across the business globally?
As you may know, that we have just had the pleasure of having a new head of China coming aboard just a month back. And that's a clear signal that China is very, very important for Pandora. We did see positive like-for-like growth in China also in the third quarter of this year, plus 1%, and a total growth in China in the high 20s. So we are still growing in China, and we will continue opening up new concept stores in China also in the future.
And is your name in the ring for the job as CEO? Do you want to be full-time CEO at Pandora?
No, absolutely not. I'm a CFO, and I really enjoy being the CFO of Pandora.
Well, you talk about this forceful program to cut costs materially. Tell us about some of the movements here. What are some of these forceful programs that you're implementing?
We have been running a health check of the business during the last couple of months, and from that it's clear that we are not moving forward fast enough on our strategy execution, and we can see that we need to have a very different approach to how we manage costs. We need to have a very different approach to how we look at the use of capital, and then not least we need to redirect our focus towards like-for-like growth rather than total growth, including acquisitions. And as part of that, we are making a first very important step today, announcing that we are changing our network expansion strategy, significantly slowing down our acquisition of franchise stores, but also slowing down on the speed of opening up new concept stores. And that's probably the most important part of what we are announcing this morning.
And in what areas or what countries are you looking at? We spoke of China there. Obviously, you really want to get back into the US market too and take more market share there.
In terms of opening up new stores, if that was the direction that you were hinting at, we are focusing on growth markets. And you will probably see that going forward, the majority of the stores that we will be opening will be in markets like in China, in India, and in Latin America, but less so in the mature markets.
And when you use the phrase that you're going to cut costs materially, give me the 2 or 3 top things that you're going to do to cut costs. Are you going to close more stores, cut jobs? How do you cut materially into the business?
During the last couple of months, we have looked at every cost bucket across the company, and we looked at all parts of the value chain in the company. And it actually haven't been almost one single cost bucket or part of the company where we haven't seen opportunities to take out cost. A lot of things have been done in the past already. There's been run a procurement program, and there was also an organizational change implemented back in August of this year. But if you sort of ask sort of fundamental questions on why do we do like this, why do we do like that, then there's significant more opportunity to take out cost on top of what was already announced back in August.